All right, traders, I am live from Manhattan in New York City. We ended up doing a meetup with the top traders within Trader Society. I'm going to be trading with one of them, Mohammed, in person tomorrow. With that being said, it is time to prepare to trade the best setups at the best prices. I am going to be going over the key levels that we are planning to trade the SPY. I'm going to be bringing awareness whether these key potential levels are going to be reacting as potential roofs, resistance, or potential bottoms and supports. We must use confirmations along with our thesis to see if it's actually repeating itself, that pattern is going to repeat itself, right? We cannot blindly trade a bias. Let's get straight into it. So in terms of the SPY, this is what I wanted to bring awareness to you, and this is what it looks like in terms of my eyes. I personally think, and what you're looking at here is, this is a weekly chart. Each one of these candlesticks represents 1 week's worth of price action. And the way and the pattern that I'm seeing on the weekly chart is that we could be setting up for an overall bearish week. We are also approaching major resistance on the SPY, and we're approaching some gaps that we're going to be discussing. But this is the pattern that I personally wanted to point out. And basically, in terms of these patterns, what I'm going to be looking for is pattern recognition to see if history is repeating itself. So if we look on the left hand side, and the reason why the weekly chart and more macro can be important is it can help us, if you catch the right trend, the right pattern, it can help us shape what the week can be, right? But we're not going to trade solely based off of this, but I'm going to show you some tips and tricks. So each one of these candlesticks is a 1 week's worth of price action. You can see right here, SPY has kind of like this bearish doji week, and you can see right here, if you look at the previous week, SPY has a bearish doji week, right? What happened after that? It formed a nice bullish pin hammer. What happened this week? It formed a nice bullish pin hammer. Then what happened the next week? The next week, it's sold off, right? So what would be some confirmations if that pattern were to repeat itself, right? So I'm comparing the left to the right. Well, last time it topped out towards the highs of this week. So if this pattern were to repeat itself in terms of what it did last time, looking how it's looking, we would start to top out towards 416. So your first key level, write this down, is going to be the previous closing price, $416. If this reacts as a roof, as a resistance level, we are rejecting it, then SPY is going to start to have a sell-off, and I will be scalping put options at 416 with a very tight stop. The stop will be around these highs right here towards 416.30, right? But if I ever see SPY breaking below 416 and looking bearish, I will try to get my puts as close as possible to 416 with that bearish confirmation, right? So that's one thing that I wanted to bring awareness to. Now, if that pattern doesn't repeat itself, what would SPY do? SPY would break above 416.30 and it would continue to trend up. And if that were the case, what would be the level for calls and puts? So if SPY ends up gapping up, it's forming a floor at 416. It's not repeating that weekly history where this is just, continuing to uptrend. It's not dropping at 416. I would look to potentially buy calls at 416 if we had a massive gap up with a very tight stop. And then if I get stopped out, I could try switching to puts. In terms of puts, if SPY was performing bullish at 416, then this would be my level. My level right here is going to be on this gap. There's a gap to fill at major previous resistance on the SPY. Let me show you guys what I'm talking about. Big shout out to Mohammed for actually bringing awareness to this gap. I actually didn't see this gap. This gap right here, there's a gap to fill on the SPY at 419.99. This gap right here. Nobody's talking about it. The gaps that I was looking at was this 422.14 and this 427.89 and this 429.70. That would be the best price if you're looking to swing trade puts and get some passive income on some October puts. You want to do that, just smack it at 429. You could write that down for the future passive income trade for those of you who watch these videos, right? But anyways, there's a gap to fill here on the SPY that has not been touched at 419.99. And another reason why I like this for a potential crash and gap close reversal is because it's major resistance. So what you need to understand is this is going to be another crucial. So 416 is a crucial level, and then $420. This like 419.50 to 420 is a crucial range for the SPY, and I want to bring awareness and show you, right? So look at this. It's going to be a major move at this level and also at 416, but this is going to be major. You can see right here, SPY was at 419.96. It missed the gap by 3 cents and had a major crash to $405. Big downside potential. Now, write this down. If a big downside potential resistance level breaks out and reacts to support, what's it going to do? It's going to do the inverse. It's going to have a big upside potential level. You can see right here, once it broke above $420 and turned it into support, very, very quickly, it shot up to $430, right? So basically, what we're looking to do is we're looking to determine if 416 is forming a roof or a floor, and we're looking to determine if $420 is forming a roof and forming a floor, right? Now, in terms of initial scalps, initially, right off the bat, I would be interested in just getting in on puts at 420 with a very tight stop. Yes, you can use confirmations and you can use, you could stack a lot of things. And I encourage you guys to do that as well, right? But in terms of initial reactions, we should see a small rejection. I want you guys to understand, I'm a scalper. I get in and I get out very, very quickly. First time this touches 420, very likely we drop back to like 419.50 very, very quickly. And it might not turn bearish. It might just keep going up after that rejection. But within those 50 cents, if I top ticket, I can make a very lucrative return in minutes. And that's my style of trading. So do not sell these key levels short. And what you need to understand is it's make or break, man. If it breaks out, reacts as support, no shock, it goes to 430. If it breaks down, reacts as a resistance, no shock, it drops back down to $416, right? So these are the things that I need to bring awareness to. You need to understand if a major key resistance level breaks out, drops back down, reacts as support, forms a floor, then big bullish move up. No surprise that the bears are getting wrecked because it's a floor now. It had a breakout, it pulled back, and if it bounces and forms a floor, then it's a floor, no shock. Instead of big downside, it's big upside. And then the same thing, in terms of the call side, right? If SPY has a major move to the downside and, it hits a key support level, but it rejects, bounces back up, turns it into resistance, big downside move, right? So you need to be aware of these levels. Do not get trapped. Never blindly say, oh, there's going to be major resistance at 420 or 416. You need to get stopped out very, very tight, because if it blows through that, it can be a massive breakout. But the chart is what's going to tell you guys everything. Like, look at what the chart, you see how critical this is. There's a gap to fill at 420. It could have a gap close reversal, or it can do the inverse. It can fill the gap and just keep going in the same direction it came from prior to filling the gap, right? But the point is, there's going to be a massive move at this 420 level. You can see when it reacts to support, 10-point move to the upside fairly quickly. Reacts as a resistance, 10-point move to the downside fairly quickly. Now, let's break things down. Let's talk about the micro now. So those are some macro levels that I need you focused on. What we're going to do right now is we're going to be discussing some micro levels. So our key levels that are going to be $420 and 416. Those are our two best key levels that we're looking to trade heading into tomorrow. Now, here's some things that I want you to understand, and these are going to be other levels that you just need to bring awareness to in terms of price direction, right? So this is crucial. Look at this, man. You had major resistance on the SPY at 413, right? Major resistance, had a massive sell-off to 404, then it ripped back up, had a smaller sell-off, ended up forming higher support, and then you could see, once it breaks above $413, that's what you want. Massive breakout above 413, then what do? You miss out. You don't go buying the breakout. You don't know if it's going to break out or not. There is confirmations you can use to determine if it's going to break out, but what I like doing is overreactions. I would like missing out on a big move, just let it have a massive breakout. Then when it drops back down to where the bears got to where the bears got trapped, which was at 413, it finally had its breakout. Bullish hammer on the 30-minute. And then it just continues to skyrocket. You see that? You got a nice bullish hammer on the 30-minute. That's confirmation to buy calls when that 30-minute candle closes. And then you buy the opening of this, and then you sell into the resistance. That's just a nice play and a nice example of things we will be looking to be doing, right? So in key levels that I need you to be focused on are going to be, of course, this $413.50 to $413. This overall like 50 cent range, right? What I need you to understand is, and this is what you need to have in terms of big overall moves, for the SPY to flip truly bearish in like a crazy sell-off week, they would need to blow under 413. It would have to go under 413, crack, react as a resistance. If the SPY does that, where does it go? It goes right here. Look at all of this support at 410.20. If SPY went super bearish, I would likely do this. I would try to buy the dip at 410 for a quick reversal. See how every time it has a nice sell-off, a nice sell-off, a nice sell-off, a nice sell-off, it instantly bounces almost every single time at this 410 level, right? So you need to envision these crazy moves. What's a crazy move? SPY goes to 420, quick entry on puts, tight stop, right? That's a good opportunity for puts. If we have a crazy crash, SPY goes to 410, strong pre-market support, proven strong support, hit the calls. Tight stops, because you know if it cracks that level and forms a roof, right? So if it cracks that level, bounces back up, forms a resistance level, then it's actually confirmed bearish. Just because something cracks doesn't mean it's bearish. Just because something breaks above doesn't mean it's bullish. You have to actually wait to see if it breaks above the level, then it pulls back. If it forms a floor at resistance, then it's bullish. Miss out on the first move. If it breaks under the support, then it spikes back up, forms a roof, then it's bearish, right? But basically, in terms of quick scalps, if there was some crazy rug pull, it's gonna initially bounce at this 410. You can't go wrong. Look at this, man. All of this support at this, look at the wicks. Pay attention to the wicks. Pay attention where the big moves are happening. Pay attention to where the nastiest bull and bear traps are getting created. That's what I want you to focus on. So 410.50. All this support at 410, 410.50, go with barely in the money, 410 strike calls, write it back up to like 411, 412, right? Tight stop. That's another play I would look. So basically, in terms of some, plays that I'm seeing, we're going to be analyzing 420, we're going to be analyzing 416, we're going to be analyzing 413, right? So this is a key zone. If it drops to 413 and they hold, then we go back to 415. If it goes under 413 and then it goes under that, then we go back to 410. In order to be crazy bearish, it would have to crack 410 and form a resistance. See how right here it cracks 410. You see how it cracks 410, spikes back up, bearish doji. There's your confirmation to go short. You don't go short into the red, short into the spike, but with the bearish confirmation as well. You could use that too, right? The retest, not the initial move, right? Then it sells off. No shock that it drops, bearish on 30-minute, right? So I need you focused on the 30-minute. I need you focused on the 1 minute for scalping in the 30-minute. I need you focused on the 30-minute patterns, the green and bullish trend reversal candlesticks. I need you focused on our key levels. So best levels, 416, 420. I like a killer scalp in terms of something that I can call in advance. Just a quick scalp on calls at 410. Very tight stop. And then if it flips bearish, goes under 410, that would need some sort of super bearish confirmation. Like it cracks through, spikes back up, bearish on the 30. Then I could try puts that low level. But you know me, man. I don't like hitting puts at lower levels getting trapped. But I'm not going to stay in a trap at a good price. If puts are good at 420, I'm not staying in. I'm getting out. You need to understand my entries are nearly stop losses. When I enter a trade, it's nearly my stop loss. So that's what you need to understand. And there's tricks you can do with scalping where it just works. You buy when it looks bearish and then just flip screen 1 minute. And if it doesn't flip, get out within 2 minutes. Like there's tricks you can do with entries and confirmations and things for an advance, right? But basically 416, 420, 410.50. What would be some other levels to keep an eye on, right? So other levels that I need you to write down. So what I'm going to do now, this is called a breakdown sheet. So write this down. You can write down these levels, and what you need to understand about these levels, if it reacts as a roof, as a resistance, it drops to the next level. If it reacts as a support, as a floor, it spikes to the next level. So what are the overall levels if we were to just kind of break this down, right? If we were to just kind of break this down in terms of a mixture of like a micro and a macro perspective, I can get very, very micro, and that's something I do with scalping. But if we were just kind of break things down with an overall micro and macro mix, what would be the levels, right, from top to bottom that we could focus on? $420, right? So 420, 416. Okay, let's continue to break it down. We're going to use the 30-minute. You can also break it down with the 5-minute. The further you go, the more it's breaking down with scalping. You can use the 1 minute, right? But let's take a look, right? So 420, 416. What's another crucial level? 413. This 413 is very crucial, right? What's crucial below that? 410. What's crucial under 410? Well, this 410 is major, man. Look at the traps. If 410 reacts as a support, big move up. If 410 reacts as support, big move up. If 410 reacts as a resistance, big move down. 410 is critical. 416 is critical. 420 is critical. What are some other levels? In terms of calls, if this got slammed down, $404.36. Write this down, and you need to save these levels. It can be greater than next week. Always use these levels. Study where the biggest bear and bull traps are getting created. Where are some crazy trap levels? 410. 410, that's a trapper level. You're literally trapping at that level, man. And don't get caught in the traps. Cut your loss quick, get your best entry, switch sides, or sit on the sidelines. Do not hold your hopes. It is your responsibility to use confirmations. It is your responsibility to get the best entries. It is your responsibility to identify if it's forming a floor or a resistance level. And if it goes against you, you tap out quick. If you like, you can switch sides, or you can wait for a better confirmation, then you can switch with the trend. Do not get caught in a trap. No matter how bearish you are, let the bias go. No matter how high the resistance level, don't get caught in trap. No matter how low the support level is, don't get caught in trap, right? But based off of some phenomenal opportunities, man, look at this. Look at this trap that got created. We're going to go back here. $404. We had the biggest bear trap at $404. So what do you think is going to happen if they rug this back to fill the gap at 404.36? It's going to be a great opportunity to trade. And some of these levels you can swing trade off of. That gets more advanced, right? I don't have the time to share with you everything as I know and confirmation stuff like that, right? But I'm giving you, man, 404 best level for calls. 410, hit calls initially. If stopped out, you can try puts. Do not get trapped. Don't get trapped in calls. Don't get trapped in puts. Best levels, 404 for calls. 410, amazing bull or bear trap level. So what's so significant about 404? 404, massive bear trap, big upside potential. What's your risk buying calls with a tight stop? There is no fucking risk. What's great about 410? Massive bull or bear trap. Bull or bear trap. It had bull traps and it had bear traps, but it had big moves. You see, it had huge moves. There's going to be big moves at 404. There's going to be big moves at 410. There's going to be there could be a move at 416. There could be a massive move at 416, like we discussed in the beginning. We'll see how it reacts. 420. 420 is going to be a big move. Will, what's your big move levels? 420. 416. 416 can be if we reject in the pre-market early, definitely. 413, I'm going to eye it, not the best. I'm going to eye it. 410, 404. Those are your big move, crazy bull and bear trap levels, right? So know the difference. Know the difference in your levels where the wide ranges and the best risk to reward ratios are created. If you have the best risk to reward ratio where the big move is being triggered, you just can't go wrong, man. You get stopped out, you switch sides, you sit on the sidelines maybe, you wait for a better confirmation, get back in. Just don't hold. Don't hold against the trend. Don't hold against what's the market telling you. If the market's telling you this is a level where a major trap can get created, 404, 410, 420, right? And a floor is forming, then it's calls. If a roof is forming, then it's resistance. Understand that. Don't underestimate levels. Don't underestimate levels. But initial reactions, calls at 404 is a great idea. Calls at 410 with a tight stop is a good idea. And then if it reacts bearish, switch to puts. Puts at 420 is a great idea. If 416 reacts to strong resistance, puts is a great idea with a tight stop at 416.30. And then remember, you can switch sides. There's going to be big moves. FOMC is coming up. It's going to be a phenomenal week to be trading. That's my overall analysis, and that should help break down in terms of the things that I'm looking at and seeing. Thank you guys so much for tuning in within Trader Society. If you do want to be a part of Trader Society, it's going to be the first link down below in the description. It's a one-time fee. You get lifetime access to everything, including live trading, live streaming, live voice, our daily analysis, all of our key levels, the chat room, the networking opportunities within the chat room, the group, the community, the moderators. There's so much more to it, the course, the video lesson library. If you want to check it out and get started on your education now, it is the first link in the description. I'm going to be signing off. Thank you guys so much for tuning in.